I have the great pleasure of hosting Mr. Anthony Pompliano. So, Mr. Pompliano, thank you so much for your time and for doing this podcast.
Thank you so much for having me.
Wonderful. So, I'd like to start our discussion with recent news. What is your comment on Bitcoin passing the $100,000 mark?
Well, look, I think that there's a lot of people who have worked very hard for a long time at driving Bitcoin adoption, really understanding it, building, securing it, mining, all these different aspects of Bitcoin that make it what it is. And so, although $100,000 doesn't necessarily change anything, I do think that it's a really big psychological milestone. And so, the people in the community, obviously, it's fun, it's euphoric, it's cool to celebrate that. But simultaneous to that, I think there's a lot of people outside the Bitcoin community who it's eye catching. They really say to themselves, "Oh wow, it's incredible that this hit $100,000. Maybe I should go and take another look at it."
Right. And what do you think are the most underappreciated risks in Bitcoin nowadays?
Well, I think that the general risk is that there could be a self-induced kind of software bug. But I think that risk is very, very small. The Bitcoin software development process is fairly slow, methodical. It's very kind of security focused. There's a lot of checks and balances. There's test nets, et cetera. And so it's not something that I worry about or stay up at night. Kind of considering. But I do think that it's at least worth calling out that, although small, it is a potential risk.
I see. And how do you see the Bitcoin's role evolving as traditional financial institutions continue adopting it?
I think that large institutions are going to continue to adopt Bitcoin, and whenever you see these large institutions kind of buying or coming into the market, you got to ask yourself why. And ultimately, if Bitcoin is good for an individual and it's good for a corporation, it's going to be good for a financial institution. And Bitcoin is unique in that it is the first asset that I know of that had a bottoms up adoption story. Usually technology is top down, it goes nation states and military, then corporations and financial institutions, and then last to receive it are the individuals. And so this has been in reverse. And I think that there's a lot of financial institutions who are saying, okay, now I think Bitcoin is not risky anymore. And so it's this fascinating thing where as the asset gets larger, it actually becomes less risky. And that allows for these larger pools of capital to come into the market.
Do you think there are any situations where government should turn openly hostile towards Bitcoin, and how might the network respond or adjust to something like that?
Well, Bitcoin has had governments be hostile to it before. There was the famous China banning of Bitcoin mining in May of 2021. We've seen countries like Nigeria and Pakistan ban the ownership or trading of Bitcoin. But what we've seen in those countries that banned ownership, adoption actually went up. People said, "Well, why doesn't my government want me to have this? And let me go check it out." When it came to mining, there was a big drop. More than 50% of hash rate went offline. But within 7 or 8 months, hash rate was back to an all-time high. So people simply unplugged their machines, moved them somewhere else, and plugged them back in. Pretty simple and self-explanatory. And I think that's the type of stuff that people really are, kind of getting comfort with when it comes to nation states and Bitcoin.
And you often talk about inflation and the macro environment. So, given the current trends, where do you think we are headed in the next 5 or 10 years economically?
Well, right now, I think that we are in a easing monetary policy regime, and so we saw the Federal Reserve, create a very tight monetary policy. They were draining liquidity out of the market, they were dropping interest rates, and they were really, kind of creating a lot of friction. And so that disincentivized investment, it disincentivized growth. But ultimately, I think what we just saw is with these interest rate cuts and now the expansion of M2 money supply, I think we're going to go back to an easing policy and already are. Combine that with Donald Trump and kind of this new, kind of era or regime in politics, and I think that it'll end up being pretty good. It's a tailwind for assets like Bitcoin.
Mhm. And how should an average investor approach investing during uncertain economic times like these?
I think just being long-term oriented, right? If you are investing and you're very short-term oriented, you kind of get upset when there's volatility. You make mistakes. You trade too much or whatever. I think in this scenario, what we're watching is that the investors who are able to say, "Look, I don't care what the price changes, day to day, week to week, month to month. All I care about is what's going to happen over the long run." That's usually a much better way to kind of live your life, and seems to be the way that is really driving value for investors.
Right. And beyond Bitcoin, what excites you the most about the blockchain space? And are there some use cases you believe will be game changers in the next decade?
Well, I think that we already are seeing other use cases, right? An easy example is stable coins, where somebody is basically taking, fiat currencies, they're putting it on digital rails. The market cap is probably close to $200 billion now, of all the major stable coins. And it's very clear the market has said, hey, this is valuable. And so you can kind of go through a bunch of different examples, but I don't think we need to speculate about what potentially could happen. We can look today to see a variety of different things that people are already doing.
Decentralized finance truly challenges banks, or do you think we are still far off from that scenario?
Well, I think that you can look at it as challenging, or you can think about it as providing options in the market. And I think that providing options in the market is a better way to kind of look at what's happening. Sure, is there some competition? Of course. But most people I know who use, let's say, a decentralized exchange, they still use a centralized bank account in a major bank. And so they have the ability to kind of go back and forth between the two systems. And I think that that's really the best way to think about this is, people aren't going to choose one or the other. They're going to use both.
Mhm. And you have built and invested in multiple businesses. So, what's the biggest mistake you have made early on, and how did that shape your future decisions?
I think it's kind of a weird answer, but my biggest mistake is probably not, going more after things when I was right. Kind of having conviction to go bigger, and you just learn that over time as you kind of gain confidence and start to understand that maybe you do have a unique insight or advantage. And then I also think that another mistake is you can trick yourself into thinking that business is about something other than people, but it ultimately just comes down to people. Do you have the right people? Are they working on the right thing? And if you can always answer yes to those two questions, then you're going to be in good shape.
Right. And for someone just starting out in entrepreneurship, what's the one thing they should focus on developing above all else?
Well, I think actually resilience is a really important part. One of the things about building companies is you're going to have highs, you're going to have lows, you're going to have everything in between. But ultimately, I think that in those moments that are not so fun or tough or a little bit volatile and chaotic, having the resilience, the dedication, the persistence to make it through is really really important. And so when people think of entrepreneurship, they usually think of the magazine covers or how high things can go or how well things can go, how fun it is. But if you go and you talk to people who are building companies, they usually just spend all their time thinking about all the bad stuff and constantly trying to prepare for the next, crisis.
Mhm. You have also successfully built a media brand around finance and crypto. So, how do you think the intersection of media and investing is changing the landscape of financial literacy?
Well, look, I think that the internet has really democratized access to information across every sector. The beauty in finance is that now people have access to more information than they've ever had, from different voices and different viewpoints. It's in different formats. It's consumable across text, audio, and video. And also, that information is meeting them on the platforms where they are. You no longer have to go and sit down in front of a TV and turn the remote on. Instead, if you are simply on your phone, the content is meeting you there. And so I think, it's a number of different factors that all come together to really open up access. And obviously, if you have access to information, people should be more educated. If people are more educated, that tends to be, a good thing for the market.
Mhm. And what's your process for selecting information, and how do you decide what's worth sharing with your audience?
Well, sharing with the audience is usually just focused on what do I want to talk about, right? And usually it's for myself. Like a lot of the tweets and stuff are just things that I'm actually tweeting so that I have a record of them. In terms of other content, the podcast, I'm doing it for myself. I'm learning from somebody. The trade is, hey, you come and talk to me and teach me everything you know, and then I'll share it with my audience. And then same thing with the letter that I write every morning. Really comes down to it's a way for me to be selfish and clarify my thinking, do research, kind of put effort into all of this. And so the more that I can do those things, the better off I think I'll end up being.
Right, and you often talk about betting on yourself. So, what does that look like in practice, and especially for someone with limited resources?
Well, look, betting on yourself has nothing to do with resources usually. It actually has everything to do with having the courage to take action. And if you think about kind of the famous stories of people betting on themselves, all the way to the ones that nobody knows about, somebody woke up one day and they said, I'm going to do the thing that I want to do, and I believe in myself. And, we live in a society where a lot of people live in fear. They live in fear of what other people are going to think. They live in fear of what if something doesn't work out. They live in fear of how am I going to make a living, right? Things that are, sometimes very much rooted in rational thought, and other times that they're rooted in irrational thought. But if you can get over that fear and you can put yourself in a position that says, I'm going to do the thing that I'm not going to regret. I'm going to go after the opportunity. I'm going to do it my way. I'm going to go and I'm going to try to make this successful. Find those people tend to be in a position with a much more high probability of success.
Mhm. And if you had to make a bet on one thing that will fundamentally change the human society in the next 20 years, what would it be?
Technology. I mean, there's all kinds of different technology. Obviously, right now we're on the precipice of a number of technologies kind of converging in various ways, but everything from kind of space and rockets to CRISPR and DNA sequencing. You've got artificial intelligence and machine learning. You've got self-driving cars. You've got robotics, humanoid robotics. You've got a lot of stuff when it comes to Bitcoin and kind of cryptocurrencies. And so you just look at all these different technologies and you say to yourself, the world is probably going to look very, very different 30 or 40 years from now. And many of those differences are going to be due to technology.
Mhm. And what is one commonly accepted idea in the finance world that you think is just plain wrong?
Well, probably some of the core beliefs that the traditional financial system has, things like the efficient market hypothesis. Markets are inherently inefficient, and so I don't believe that that actually is a true hypothesis. And people won awards for it, but I think we've proven it to be incorrect. The second thing is I think that there's a lot of folks who see risk as a negative thing. They run away from risk, but the best investors, the people with the best returns, in my opinion, they run towards risk. And so they continue to seek risk. They look at it as the risk you take is the return you capture. And so I think the more that people just think independently, think critically, and understand that maybe the world that they grew up in or the advice that they were given, what happens if they were to invert that and kind of test the thesis of like, what's the opposite? I found that to be a great exercise.
And looking back at the beginning of your journey in finance and media, what advice would you give to your younger self?
Have no fear and go bigger.
Yeah, simple as that. And
That's it.
one final question. What do you think future holds for you? So, where do you see yourself in like 10 years from now?
I hope that I'm happy. I've got a loving family, and I'm doing whatever it is that I want to be doing. If I can check those three boxes, then I'm winning.
And business-wise, your investments, your companies, your business ideas.
Yeah, look, I think all the business stuff kind of takes a back seat to your personal stuff if you really are focused. But obviously, I want to be successful in whatever I do. I tend to think that I'm ambitious. I want to work hard. I want to work on things that are important, things that have an impact. And so, when you look at that, if it's through investing, then we want to put capital in places where it is treated well, and we get back more capital than we put in. When it comes to building companies, it is trying to create, products or services from scratch that previously didn't exist, but that solve a problem for a large portion of people. And so, if we can continue to do that over and over again, then we'll end up being in a great spot.
And the final question: what advice would you give to people who are just starting to invest now? Is it late to invest in crypto, in Bitcoin?
Learn. Spend all your time learning, right? Is one of the ways to mitigate risk is through knowledge. What other people see as risk, if you have knowledge, then you aren't worried about it. But also, those that are unknowledgeable may believe something is not risky, but those who do have the knowledge know it's risky. And so, the single greatest thing you can do is invest in your education, invest in knowledge. I read a lot. I talk to as many people as I can. I'm constantly seeking out new information, and so I think that learning is a very, very important part of kind of the investor journey.
I see. So, Mr. Pompliano, I would like to thank you for your time and for this wonderful conversation.
Thank you so much for having me. You got an excellent podcast. I really appreciate the opportunity.
Thank you so much.